For those of you guys who do not know me, my name is Navin Prithyani. I'm the senior trader at urbanforex.com, CEO of Black Tower Investments in Hong Kong, and also CEO of Anticipate, Don't Participate, DMCC in Dubai. So what we specialize in is focusing on uh, teaching trading in a way from the perspective of prop trading, but in a way that it's understandable. Okay, that's what we're really, really good at. Like when I say really good, I'm talking awards. We're one of the finest. We drive the industry. Okay, so we've been around since 2009. We've been on YouTube since then. We've been with FXStreet slightly after that as well for a very, very long time. So we generally drive the industry when it comes to innovation and techniques and strategies on how to look at the market, and more importantly, how to teach it so the end user can actually understand on how to get into trading more efficiently. Okay, because let's face it, it is difficult. Okay, perfect. So let's begin. So one of the things we wanted to talk about today was this topic that my team has been talking about, and we've laid it out with FX Street as well, that we're going to be talking about this today, is a bear market is either already here or is around the corner. Okay, when people think about bear markets, people panic, right? They're like, oh no, everything's going to crash, it's going to be tough, and this and that. Well, that's not necessarily the case for us traders. For us traders, this is an opportunity that actually shows up. Now, I don't mean it in terms of investing, because I'm not here to teach you the investing techniques, but more on the trading side of things. How many of you guys in this room are traders and not investors? Okay, and maybe I can even ask the question, how many of you guys in here actually don't know the difference between the two? Hmm? Okay, so Cipriano, you're saying trader, okay, okay. All right, so let's briefly go over it. Zhenjing, you're saying trader as well? Okay, so let's briefly go over it and talk about it real quick. Let me move this out of the side and let's do this. Uh-oh, why is my screen not, let me see if I can use the empty space. Here. Okay, I'll just use this empty space. I'm going to draw something on my screen. Can you guys see the circle and the face? Just to make sure the marker is visible for you guys. Yeah? Okay, Craig, you also said trader. All right. So I just want to make sure you guys are very understanding of what the difference between the two is, because a lot of the times even when I get veterans coming to train under us, when I say veterans, I'm talking about people been in the market trading for 10 years, okay? Someone who's been in the market for 2 years, we'll call them a newbie, okay? Because there's still a lot of understanding to go. Someone who's been in the market for 10 years but hasn't turned profitable, we still call him a veteran because he has the knowledge, but unfortunately we need to clean that up. We have to break everything down and rebuild it, okay? Because obviously it's not working for him or her, and we need to clean all that up again. Okay, so let's talk about it. Now, how many of you guys are in the Forex market? How many of you guys are in stocks? How many of you guys are in futures or cryptos? Okay, so I see Zhenjing saying FX, Abbas FX, Usman FX, Craig FX. Okay, so it looks like we'll get the majority of you guys saying FX for the most part. Okay, Vito, Sylvia, FX as well. Okay, so I'm going to now tailor the entire webinar in the language of Forex, so that way it's a lot easier for us to stay on the same page, okay? Rather than talking about any other stuff. So if we talk about Forex, are you guys aware of how this industry actually operates? Okay? Is Forex simply a product of, you see when this goes up and it comes back, if it touches a line, then we must buy? Is that what Forex trading is? Is a bunch of people drawing lines and saying, if it touches this line, do this. If it goes on this moving average, do that. If Mr. Fibonacci from Italy comes here and he says 35%, do this. Is that what Forex trading is? Is that how the market operates? It's a bunch of people drawing lines, right? So if you just take a moment and think about that, all the education that has been learned in terms of strategies, technical analysis, they're all correct. Okay, I'm not going to say no, they're not correct, but I'm going to show you on how to use it correctly, because what happens is a little piece gets missing from how do I even look at this? So let's start with some of the basics first before I can get into the deeper end of things. We're here together for like approximately 40 minutes. So let's do this right. Okay, all of you guys in here, you're okay if I dig into some of the basics and reopen it up to make sure it's solid for everybody? Because I'm telling you, even with veterans coming to me, sometimes the basics is all jumbled up. Okay, everyone knows very detailed information, but everyone's missing the basic information. All right, so here we go real quick. Okay, so the markets generally move in phases, right? They go like this. When you see this, what comes to your mind? If I just show this to you, what's on your mind? What's the first thing people do to label this? What's the label they give it? Range, right? They say, oh, that's a range. And what's a range? Oh, sell from the top, buy from the bottom. That's all anyone ever knows about a range. They kept it to a memorization, like from a textbook. This look means this word means do this for the buy and this for the sell. Okay? But now, did you ever ask the question, what is it? Why does it happen? And what next? Okay, so let's talk about that a little bit, because this is very important to understand. So what range is, okay? Cipriano, you're saying veteran but need improvement with scalping. Okay, even with scalping, there is a sense of understanding of market operations. It's very important. So let me go ahead and explain this over the next 5 minutes. See if it strikes a nerve with you and you say, okay, got it. Now it makes sense a little bit. Okay, so I'll check back with you in 5 minutes and you let me know. Okay, so when the markets are going sideways, what's basically happening is whoever is selling and whoever is buying, okay, they're doing a handshake. They're saying, I will buy, and the seller says, okay, I will sell. It is being matched. So if this is between $2 and $1, everyone is saying, I'm happy to do business in that area. That's what a range is. Now tell me, when you see this, what comes to your mind? Okay? People generally label this as trend. They label this as maybe uptrend. They label this as higher high, higher low equals uptrend, right? So these are all definitions, right? These are all definitions. Again, forget the definition. What does it mean? What happened? So if we were in a range and everyone was happy to do business, how did the prices started suddenly flying? Is it because someone is trying to steal money? Is that how it is? No, that's a very basic way of thinking, and that's the wrong way to think. Okay? Now, how the market generally moves is you have to understand that if you want to buy an iPhone, okay, I'm just going to use iPhone because it's a simple thing to talk about. If you want to buy an iPhone and the iPhone is $700, okay, and everyone's happy to buy $700 and Apple is selling it at $700, this is equilibrium. Everyone is happy. Now, what happens when Apple says, you know, due to Corona, we have short supply, and now I only have 500 pieces, okay, 500 units. We were all normally used to paying 700. Suddenly, there's only 500 units. What's going to happen? The thousands and thousands of people who are waiting down here, they will say, you know what? I'll give you 705. Give it to me. The next guy will say, I'll give you 800. Give it to me. The next guy will say, I'll give you 900. Give it to me. This makes prices fly because there's a shortage. Now, I want you to take a moment and think about this. It is not because someone hit the buy button. I want you to remove that from your head and throw it away. It will never need to come back. It is not because someone hit the buy order. It is because someone didn't get filled. You need to understand that. If you wanted 10,000 pieces, but there's only 500, you're not filled. And when you're not filled and no one else is filled, people say, I'll give you more, I'll give you more, I'll give you more, I'll give you more, I'll give you more. So what is happening is there's many people on the sideline saying, oh crap, I didn't get the iPhone. So far so good. Are you guys with me? Are we cleaning up the old nasty history of, oh, it's going up, that means you have to buy. Green candle means up, means buy. It's not that. Yeah? Shall we go a little bit deeper? Okay, let's go a little bit deeper. Now that we have a little bit of this knowledge that an uptrend is not an uptrend, but necessarily an up movement is inability. It is a people are not filled. When people are not filled, they want to buy. They want to buy, but they are not stupid people. You have to think of it like that. The big money is not dumb, okay? So they will say, I want to buy, but I am not paying you this price. Give me a good deal, and I will consider it, okay? If the prices come in as a good deal, that's when we see all the people who didn't get filled here, that's why the prices are rising. Will they come and say, I will buy it now? Now, in this whole process, these guys are investors. What we are as traders is we are saying, iPhone? I don't care about the iPhone. What I care about is, do they want to buy again? If yes, I want to buy 20 iPhones myself. I want the prices to rise, and then I will close the trade and sell it to them who are desperately willing to buy it. A trader is a middleman. He's a middleman business. He's an agent. He takes the item because he knows it will be worth more, and then he sells it back to people who are desperate. Do you understand the logic between? So a trader is not, I will buy here and hopefully it goes up. That's not a trader. That's an investor. Okay, so a trader is now focusing on what the investor will do, and he will step in front of it and saying, let me get the order and sell it back to you guys. That's a trader's job. The word trading comes from the ancient times. It is not, the people in the past did not look at green and red candles, right? They had boats. They used to go from one country to the next, picking up items for cheap and selling it more expensive at the other place. And in return, they make the small profit between the items. But do they want the item? No, they don't care for the item. This guy cares for the item. He is the investor. Does that make sense? So Fafon, you're saying buy low, sell high, not buy high, sell higher, right? Yeah, anyone who buys high, sells higher, obviously is has a very limited lifeline in this industry. All the money will just feed back into the system, and the 2 or 3 times he or she makes profit, it's gonna be gone. That's guaranteed, like absolutely guaranteed. Yeah. So trading is nothing but simple business logic. Okay. If you run a store and you have goods, you got to buy them cheaper, or whether you buy them from China and then you have to sell it somewhere in the US where people are willing to pay higher for it. That's what trading is, right? You're trying to churn that profit from the margin between the buying and selling. So far, so good? All good? Does that make sense? So just a little pop quiz for you guys. When the markets are this way, is everyone happy? Is everyone getting what they want? Yeah, absolutely. Everyone's getting exactly what they want. They're getting filled. Someone wants to buy, they got it. Someone wants to sell, they got it. It's working. Now, when the prices go like this, it is not because of a buy button. It's because people didn't get filled. Okay, you have to remember that. The further it goes, the more desperation. So going forward, if there's one thing I want you guys to take away from this moment, is this is not sign of a buyer's market or an uptrend. This is a sign of desperation. This is a sign for the whatever iPhones, or if it's Euro USD, for example, there's not enough euros, so everyone wants to buy it. There's desperation. People wanted this price and they're not getting it. So they're saying, I'll give you more. Give it to me quickly. I'll give you more. I'll give it to me quickly. And then prices get too high. And there's many, many people saying, oh man, I didn't get filled. Right? They're on the sideline saying, I didn't get filled. I need that price again. So if I can get a decent discount, I might consider it at a little bit higher price. And that's how a trend goes up. This is how you get a higher low and a higher high sequence. It is that logic that makes that design. Okay? So far, so good? Okay, now I'm going to change the language into technical analysis, a language we are all familiar with, away with the logic, more with the language that everyone has trained for. Okay? The lines, the pullbacks, the SNRs, the trend lines, this is all the simplistic stuff that we learn on YouTube. Let's talk in that language now. Now, if the markets are doing this, boom, 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 and it goes, wow, all the way up, okay? Then it starts pulling back, pulling back, pulling back, and then it starts to go up. If we say, all right, I was hoping the price would come to support resistance, it didn't, and then it's going up again. Okay, now I will draw my line at support and resistance, and then if it comes back, wow, this time I got the profit and it's working. Now the price is coming at support resistance. I want to buy it. I buy it. What in the world is going on? Ah, stop loss. I did the exact same thing as before that I had studied, but it's not working. Now use the logic. I just input that logic into this technical analysis design. There was happiness, equilibrium in the market. There was an offset. People were not filled. Remember that word. They were not filled. So what happens when the price pulls back? Can you guys guess? What happens when the price comes back a little bit for them? Some more people get filled. They're like, okay, I'll take that price. How much further did it go this time? Did it go a lot? It went a little. So they're like, oh no, there's still some people who are not filled. Stand by. So when prices pull back, some more people bought. But this time there's a little bit more desperation. But look at that. Not so much. Not so much. Everyone is getting filled. So this time when you go to do the buy, support and resistance is there. Technical analysis there. Logic is missing. Why would anyone just buy just because there's a line there? You see? So if you use this understanding that we just talked about over the last 5-10 minutes, you'll start to understand very quickly like, oh, I'm just wasting my time just drawing lines and saying sometimes works, sometimes doesn't work. Well, now you know why and how, when it will work and when it will not work. Does that make sense? Okay, and Abbas, you're saying, please help on how to set stop loss professionally. Well, all of the stuff that I'm talking about, it should guide you because, okay, if Abbas, I tell you your stop loss needs to be 30 pips, does that mean anything? Right? If I say your stop loss should always be 30 pips, if you're on a 60-minute chart, what I'm doing is that I'm just making stuff up. But what if the market is very busy today? 30 pips is too small. What if the market on tomorrow is very slow? Then even 10 pips is enough. But how do I teach you this? You see, so it's not something that can be answered in one sentence by saying, here's the fast and fixed rule, do this, and suddenly tomorrow you can just teach this to anybody and everyone's millionaires. You know what I mean? So we'll try to make sure you understand how the market works, and you will be able to tell me, oh, in this situation, I'd put my stop loss here. In this situation, I'd put my stop losses a little bit closer just in case. You see, you'd be able to gauge it better just by understanding what's going on. Okay? So I'll give you an example here. So I'm currently in this New Zealand yen for a buy. This trade is currently running for $4,600 on this one. I also have another one running on Interactive Brokers for approximately $10,000 or $15,000 on that one. Let's see what the team is talking about here. Here we go. Okay, so there's a lot of my students are actually on this pair as well. Okay, so on my other broker, Interactive Brokers, this trade is currently running for 13,500 minimum right now, and you've seen that. So look at these trades, how these guys are entering and holding on. One rule fits all. Look at his stop loss this time. Why is the stop loss not here below this SNR? Why is it here? Why is this stop loss below this over here? But how come this stop loss is not just below there? There's reasoning behind all of them, but they're adjustable reasoning to understand what do I need to do and how do I stay safe. Okay, so this requires a bit of training. I think I have some videos on YouTube about stop losses and stuff like that. Maybe you can look into that, and then if you still have questions, you can always email me at navin@urbanforex.com. Anyways, let's go deeper into this a little bit because I wanted to touch base more on this. So now, inside a negative market, okay, inside a bear market, what I personally like, okay, if I just open this up, I wish I can't. Hold on. Okay, let me just make this into a daily. Okay, so what's happening is New Zealand is getting very strong. Simultaneously, yen is getting extremely, extremely weak. Me, I see this as desperation of people not getting filled. And then I'm now joining that same desperation around here. I'm saying, okay, that's a good deal. I'll take that good deal. Here we go. So I'm buying that. That's exactly what it's the same thing I'm trying to teach you guys right now. So, but there is a little technique in art to say, why not buy there? Well, how do you know not to buy here? How do you know not to buy there? How do you know to buy here? How is that even possible? Okay, so there is understanding that we have to do. So a lot of my premium webinars that I have, even at FXStreet, in case you just want to preview it or something like that, we talk about this very openly on what these things are. But if you want me to tell you a shortcut answer, um, if you trust me on this, I have to tell you, it's logic. Always, it's logic. It's not technical analysis. If you go after technical analysis, more years will be lost. I'm sorry to say that. More years will be lost. It takes a very long time to go through the technical analysis route. If you go the fundamental route, same thing. Very, very long time. Very, very long time. You need to understand why this market moves and how does it move and what does it mean when it moves. It's actually that simple. It's not difficult. It just takes a little understanding of what am I looking at. Yeah, how many of you guys in here can say, okay, I need to learn that logic system. I need to pick up and understand this properly once and for all. Doesn't matter how many years have been gone. Okay, no problem, it's gone. But starting now, I will make sure I understand this. How many of you guys in here can promise me that? Okay, good, good. Good. It will change the way you look at the markets. It will really, really change the way you look at the markets. So excuse me, shall we look at some more examples? Yeah, let's take a look at some more examples. So I'm gonna go back here and let me see. Okay, let's take a look at the Aussie Swiss franc buy. Actually, New Zealand yen, I had a buy on the 6th of July as well. Okay, some of these guys were, let me see here. I'll show you the buy I did on New Zealand yen before. A lot of my traders, they did really, really well. It's been a good pair for all of us. Yeah, so this earlier one didn't, it wasn't so lucrative, but it made around $7,000 on this one. So this was at 83.65 entry on this one. And this was on what day? On the 8th. On the 8th of July at 65. 8th of July is where? 8th July is here. No, that's June, sorry. 8th of July is where? Here. Here. This is that buy I did. Okay. Not just me, like the entire team has worked on this. There we go. Somewhere around this area. I can find you the decent entries. Okay, so I'm going to pull up the entry first, and then we're going to talk about it. So it's getting interesting now. Okay, 7 days ago. Sorry, some explanations to the guys. Give me a moment. So sorry about that, guys. I should have kept this ready for you guys. My fault. Launch now, so not yet, not yet. Good initial start. Okay. Okay, let's roll. Okay, I think the entry is here somewhere. Don't you just hate it when you have so much posts? I think that's the only one I have. This is on Pepperstone. Okay. Okay, I see where it is. Okay. This is on 6th of July around the range. Okay, top of the range area. 6th of July and here, top of the range area. I think it's around here somewhere where I have an entry. Around 65, something like that. In this area here to grab this launch off the area. Now, so let's take a look at this based on what we talked about today, because that's what's relevant to you guys, right? I can show you as many trades as you guys want, and bigger numbers, but that doesn't make a difference. What you need to know is, do I understand what you did there? That's what's important to you guys, and we need to talk about that, okay? Otherwise, we're just wasting time here. So let's talk about that and get into that part. Now, if you look at this from the 60-minute, I'm going to draw a big circle here, okay? I'm going to take you up to the daily. I want you to just quickly look at the daily and try to understand the circle's right there. Here. Circle's right there. Now, if you look at it, what I'm doing is I'm looking at this saying, whatever this movement was, suddenly went out of control. If it's out of control, what does that mean? Do you guys remember? When things go out of balance from the range, what do we call that? People are not filled, right? Okay, now let's take it a next step further. If people are not filled, what do those same people want to do? They want to be filled, but they're saying, I don't want to pay that nasty price. I don't want to pay these nasty prices. Give me a nice discount and I'll consider it. The prices come down for a nice discount, okay? And as they're coming in for a discount, I'm now watching, are you guys still interested in buying? And when I see them actually get interested in the buy, I'm like, okay, the desperation is real. Because when he came down, he didn't go sideways. He launched again. If he launched again, it tells me when the discount came, only a handful of people got that price. And then the war started again. I'll give you more money. 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 That means they want it, and they want it bad. Okay. I wasn't here to grab this, but I am here to grab that. I did the first trade there. And then here I am again a week after doing the next trade here and trying to take it all the way up. So that same logic, as you can understand. Now, how to enter that exactly, obviously we don't have time to go into all that detail, But I want you to at least be able to look at this and be like, ah, I see why that can be good. Okay? And then we can go into strategy, technical analysis. Where do I enter? Where do I put my stop loss? How do I know if I should exit soon or later or even put more money? All these are secondary questions. The primary question is, do we know which way? Okay? And do we understand which way? That's the very bottom basic that we have to understand first. Yeah? Does that make sense, guys? Does that help? So knowing that Japanese yen is very, very weak, so I wanted to point out today that we're not investors. We don't need to worry about the markets going crazy. In fact, it's an opportunity for us because the markets move a lot, even in a bear market. We just need movement, right? Because if there is movement, we make money. We make money. That means there is people willing to buy or even get rid of their positions. They're willing to sell, right? And what we do is we spot that. And once we spot it, we jump in the middle. And we say, let me buy it first, and then I'll sell it to you later, and I'll make a profit. Right? So as long as there's movement, there's lots of transactions flying around, it's good money for us. It's money-making season. So there's absolutely no fear in the bear market for traders. It's a good opportunity. Okay, any questions so far? And all of this, not to worry, all of this is recorded. So FXStreet generally is very good at getting you guys a recording and stuff like that. So all of this you guys can always watch again and try to understand it. Okay, how many of you guys in this room will tell me that yes, you have to watch this again to try and understand it? Okay, if you put in the effort, I'll put in the effort as well, that if I see your name again in these FXStreet webinars, I'll recognize you and we'll go deeper. Okay? Because generally I'll recognize names, who's coming into the room and who's interacting, and I'm happy to help. Okay, if there's any questions, I'm more than happy to help. So please watch the webinars again, the recordings. If you guys are FXStreet Premium members, look up my name and look at some of the past recordings I have. The ones here they're short, but they're also good. They're more, again, it's premium, right? So they're better. And then if you want long, extensive knowledge, then my YouTube channel is there, obviously. So, but yeah, I would go through the FXStreet premium channels first if you guys are already members of that. Okay. All right, guys. So that's all the time we have for today. If there's any questions, let me know. That's at Navin@urbanforex.com. I'll be happy to assist if needed anywhere. But otherwise, thank you, FXStreet, for having me. It's always a pleasure. Until next time, folks, cheers and bye for now.